Term versus whole life insurance. What's the difference? Two of the oldest varieties of life insurance, term and whole life, remain among the most popular types. Whole life is a form of permanent life insurance that lasts your whole life as long as you pay the policy's premiums. It also accumulates cash value that you can withdraw or borrow against while you are alive. Term insurance, on the other hand, lasts only for a certain number of years and doesn't accrue any cash value. In addition to whole and term life, several other variations have arisen, such as universal life. Today, the insurance companies offer more complicated products to reach a broader range of customers. But getting back to basic, what's the difference between term and whole life, and which one is better for your needs? These two types of policy remains the most popular and easiest to understand. We will break down the key features that distinguish these insurance mainstays. Term life insurance. Term life insurance is perhaps the easiest to understand because it's straightforward insurance without the bells and whistles. The only reason to buy a term policy is because of the promise of a death benefit for your beneficiary should you pass away while it's in force. As the name suggests, this stripped-down form of insurance is only good for a certain period of time, whether it's 5 years, 20 years, or 30 years. After that, the policy simply expires. Benefits. Because of these two attributes, simplicity and finite duration, term policies also tend to be the cheapest, often by a wide margin. If all you seek from a life insurance policy is the ability to protect your family when you die, then term insurance is likely the best fit if you can afford it. Since term policies are typically more affordable and can last until your child enters adulthood, they could be an option for single parents who may want an additional safety net. The average 30-year-old man can get a 20-year term policy with a $500,000 death benefit for $27.42 a month. Because of her typically longer lifespan, the average 30-year-old woman can purchase the same policy just for $21.74. Drawbacks. A variety of factors will change those prices, of course. For example, a larger death benefit or longer length of coverage will certainly increase the premiums. Also, most policies require a medical exam, so any health complication could raise your rates above the norm as well. Because term insurance eventually expires, you can find yourself having spent all that money for no purpose other than peace of mind. Also, you cannot use your investment in term insurance to build wealth or save on taxes. Pros. Generally, term insurance has a much lower cost than other types of life insurance. It is simpler to understand than permanent policies. Cons. Protection is only available to the term of the policy. It cannot be used as a wealth building or tax planning strategy. Whole life insurance. Whole life is a form of permanent life insurance, which differs from term insurance in two key ways. For one, it never expires as long as you keep making your premium payments. It also provides some cash value in addition to the death benefit, which can be a source of funds for future needs. Benefits. Most whole life policies are level premium, meaning that you pay the same monthly rate for the duration of the policy. Those premiums are split in two ways. One part of your payment goes to the insurance company, while the other part helps build your cash value, which grows over time. Many providers offer a guaranteed interest rate, although some companies sell participating policies, which pay unguaranteed dividends that can increase your total return. Early on, the amount of the whole life premium is higher than the cost of the insurance itself. As you get older, though, that reserve and the cost become less than a typical term policy for someone of your age. This is known as front-loading your policy. At a later date, you can borrow or make a withdrawal from your cash value amount, which grows on a tax-deferred basis, to pay for expenses such as your kids' college tuition or repairs to your home. Thank you.